The question is, where have all the short sellers gone?
Do you think that Hindenburg?
Today,
wait a minute, hold on a second. Do you think that Hindenburg going away is a bell?
This is exactly what I wanted to talk about, Tony.
Go ahead, get it. You're right.
When I read it this morning, I was like, Jesus, because this is not just the first. If I would go back to November, I think of 2023, so a little bit over a year ago, Chanos shuts down his short fund. If you go a little bit before that, I think Bill Ackman said he was going to stop short selling altogether. Andrew Left of Citron Research is sort of in some sort of spat with the SEC back and forth. But a lot of the storied short sellers have gone the way of the dodo bird. And I'm just sort of curious why you think this is. You think they've been, this person, in this case, they've finished, he said he finished the pipeline of ideas. He wanted to shut down his short selling firm and go a different direction. But I'm curious, Tom, where have all the short sellers gone, in your opinion? And do you think, to Tony's point, that is the bell? They say don't ring a bell at the top, but so many of these short sellers are just calling it quits. They're taking their ball and they're going home. Hindenburg had a really, really good record. I think I saw something like 51 out of the 63 companies, something to this extent of the companies they put out reports on. Have a lower share price today than when they put out the report. I know that's not a terrific statistic, but I mean, they had some great calls. If you go back to like Nikola, they were the one who wrote the scathing report on Nikola, which ended up in there with Trevor Milton going to prison for 4 years, something like this. So, Tom, as a contrarian, with all the short sellers shutting down shop, what does it mean to you? Does it mean anything? Where have they gone?
I think I mean, listen. Obviously, I'm not. I don't think that's a good thing. Obviously, but we need to talk about it just for a second because there's more to it. It's not as black and white as that.
Okay.
Short sellers, individual short sellers haven't gone anywhere. So people like me that love to get short stuff, we're still all over the place. We exist. Funds that like to get short, and people that like to manage short funds, you can't support yourself. Like, you're out of business. Like, it's not a question of there is just no way to raise capital and there is no way to support your business because you just don't have any results to show. That's like when people go, well, this short fund's killing. I'm like, how's that even possible? Because we haven't had you can't have a down move once every 5 years and keep a fund in business. And so I think, Victor, let's be careful that we don't mix up a business decision and we don't think about it any more than that. If you're a money manager and your money's not sticky and you're managing a short fund and people will put money in there because they're just protecting against their long funds, that's great. But if every single year that short fund is a drag against your long funds, you're like, screw it, I don't need this anymore. Sure.
Sure.
The problem with Hindenburg is not that their research was bad. The problem with Hindenburg, I assume they didn't manage money. They just were a research firm. The problem with Hindenburg is that at some point, it's really expensive to buy their research.
Yeah, you can't afford it.
And you can't, it doesn't make any sense in your model. Like, why are we even getting short this stuff? It doesn't work.
Right.
So why are we buying this research for such a huge amount of money? Can you imagine trying to be with all the markets at all-time highs? How are you trying to sell short research? Like who are you selling it to? It's a business decision. I don't think, when he said he's frustrated, I don't think he's frustrated with the job that he did or his researchers or his team did. I think he's frustrated in that his sales team, how do you support he got to be reaching into his own pocket to support everybody because, who's buying the research? That's the problem. And so if you're a research firm, somebody's got to buy your research. If you're a short selling fund, somebody's got to put the money for you to sell short. And I just don't think that those markets were that viable. And I think that's why I think it's a business decision.
Because the market didn't cooperate. It really didn't have anything
Yeah,
else. You could have, if you found a short sale and the stock was only up 3 or 4% instead of 23% like the rest of the market, maybe you did your research and it's just a rising tide kind of thing.
Let me tell you a story.
That's why you can't be one-dimensional in anything you do.
That's right. That's why you can't be one-dimensional. Let me tell you a quick story. So the year is 1999. It's actually started in 1998, but 1999, Scott and I had we had this advisory firm that we were managing money for a couple of banks, some blah, 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 a bunch of people. And one of the firms in Chicago, Mesero Financial, was quite a large firm, one of the biggest firms in Chicago.
Yeah, Mesero was huge.
Mesero Financial. I don't know if they're still around or who bought them out or something like that. Whatever. It doesn't matter. Anyway, so we had a relationship with them where we were managing a long fund for them. Not a big deal. The CEO asked us.
Still around. I don't know if they're part of something else.
They had a few $1 billion at the time. They probably have way more than that now. The CEO called us in and said, "Hey, can you guys do me a favor? Can you manage a short fund for us?" And I'm like, "Sure. What do you want?" He goes, we have all these long funds. We need a short fund. And we don't know anybody else that can manage a short fund. Can you guys manage a short fund? I go, "We can manage a short index fund. We're not going to pick stocks, but we'll manage a short index fund." They go, "Fine. Perfect. We'll take it."
150 billion right now, they say.
150 billion?
I mean, I'm just quickly looking.
So at the time they had like 10 billion. Mm-hmm. So this is a true story. This is 1999. And it was the CEO's decision. So I go, "How much money?" He goes, like 25 million for starters. We'll see how it goes. This is the end of 1999 when things are going absolutely freaking crazy.
Swimmingly. Everything is to the upside.
Everything is blowing up to the upside. And he knew it. He's like, this thing is going to crash. And we need to have some downside protection. So he puts $20 million into things. He says, "All I need you guys to do is just keep me with $20 million worth of notional short delta in the S&Ps all the time. Just keep rolling, long,
you were the hedge.
Long put short calls, essentially just a synthetic short." We go, "No problem." Mm-hmm. So we had a guy that was managing money, that was head of trading for us. And we gave him the fund, said, "Just here you got to do. It's to be long put short calls, synthetic short, notional equivalent to $20 million, blah, blah, blah." Started in November of 1999. By March of 2000, when the market just NASDAQ went to 5,000, S&Ps made new highs, this CEO calls us up and goes, "Listen," he goes, "you guys did exactly what I asked you to do, but
you got to go. You got to go.
The drag on our performance everywhere else is so bad that even though it's only like even though it's like 1/50th of the size of the rest of the money we have," he goes, I made a mistake. It's not worth it. So I'm shutting it down." This is in March of 2000. We crashed starting in the middle of March for the next 2 years. He shut it down. He goes, "How long till you get out of these positions?" We go, "Give us an hour." We got out of everything within an hour. He goes, "That was great." And then we were done, and then the market crashed. It's a true story. And we spent a lot of money putting this all together, and we ate it. We just ate the loss personally, just on, for all the startup costs and things like that, because they were good. They were a good partner of ours. Mm-hmm. But that's the problem with short funds, is the drag they put, and the drag they have on your long funds just makes it impossible to sustain. Remember that guy that's always
when you're in a huge bull market like this?
Remember that guy's always in the news, Spattenmeyer, what's his name? Spackenmeyer, whatever. He runs that short fund. Spatnagel. You know the guy I'm talking about, right? Spacnagel, Mark Spacnagel, something like that. I forgot his name. I'm saying it wrong. But he's been in the news for like 25 years about managing a short fund. I always figure out how that guy stays around. I have no idea. Mark Spatnagel, something like that.
I don't know.
Anyway,
I can't find it the way you're saying it.
Anyway, Vic, no big deal. But that's a true story.
What you're speaking to, I think, that's crazy. By the way, I've heard that story before, and every time it's absolutely insane. The timing to the month.
Yeah, but this is what happens at market tops. Everybody capitulates.
Exactly. This is what I'm talking about, is that you're speaking to survivorship bias in a way, which is everybody at the end of the year, they're chasing last year's returns. And you do that long enough over a bull market, and eventually all the money is on one side of the trade. And this goes back to BlackRock's 2025 report that I brought up on this segment. not long ago, a few weeks back, which was I will never forget the phrasing that they used, which is the U.S. economy is beyond the boom bust cycle. That we're in this sort of post-capitalist world, sort of this post-boom bust cycle. And there's some part of me, Tom, that is a little bit nervous of a world where BlackRock's writing about being beyond the boom bust cycle, where Jim Chanos is shutting down his short fund, where Hindenburg shutting down the short fund, where Ackman saying, I'm not going to short. Hold on, I'm setting you up. And then and all these people are shutting down their short funds, and then Chris Cole shutting down the vol funds. I can name a ton of long vol funds that have basically shut down as well. There's some part of me that's going like, what the hell is going on? Or maybe this is just a normal part of a market, and I just haven't been a market participant long enough to see this play itself out, where a lot of these storied names just start to disappear from the marketplace because we've been in a, ZERP and post-ZERP world for so long. But am I crazy for starting to get nervous that there's a new paradigm at hand? Walk me off that ledge.
Mark Spitznagel.
Yeah, that's the guy. Mark Spitznagel.
The guy you were looking for. I'm sorry. That comes from our YouTube chat, which you hate. Thank you.
Yeah, I just remember that guy reading articles, and I'm like, how the frick does this guy say business? But Vic, the whole industrial revolution, 3.0, the whole new paradigm. I think I've either read about this or heard people talking about this or just whatever. I mean, I look at it way more. If you believe, like I do, that there's a certain amount of randomness, and it doesn't mean we can't be in a huge boom cycle, which we obviously are. But the flip side to this is it is absolutely ridiculous to think that in a two-sided free market that we're truly entering a new paradigm. I just don't buy that. I don't buy that at all.
I never bought it. I don't buy it now. I don't buy it 10 years ago.
I mean, I've traded through
years ago.
Multiple crashes starting, everybody thought, I could.
Well, there was a new paradigm after 87 because we had skew. We got skew.
No, I'm not talking about that as much as pre-1987. Like the whole, that's everything that they talked about during the Reagan years, was the same exact thing. I remember 1987 was a new paradigm. Starting in like 1985, 1987, it was all new paradigm. It was like, we're in this, it's the next industrial revolution, blah, 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 same story.
Yeah.
And 1987, we crashed, and all of a sudden, okay, new paradigm over, let's go back, risk on. Right. We spend now, then 15 more years or 13 more years until we get to 2000, crash. 2007, 2008, same story, until we crash in end of 2008, 2009. Now the crash was so violent in 2009 that it took all the way till today. We've only really had one sell-off in 2020 for the pandemic. Since then, this has been the longest kind of bull market. Well, definitely the longest thing I've ever seen.
Yeah.
But the challenge is now, I think people are they're reading Gesundheit. They're reading their own press clippings. It's really scary right now. And I'm not sure this Hindenburg thing is I'm not sure that this is the event. I'm not sure that this is the marker that we're going to go by, but I do think the timing is really suspicious or really ominous. I don't mean suspicious. I mean ominous. I think the timing
ominous is the right word.
Yeah. I think the timing is I think we're about to enter into one of the riskiest periods that this market has, potentially one of the riskiest times this market has had. We're about to be post Jan X. Second, we're about to get a unified administration, which scares everybody because I like everybody else much prefer to trade in gridlock. And you're going to get, there's a lot of unknowns. I don't think this is an easy read. And I think that the market is, it's at a nosebleed level on top of all that. So I think you have a lot of risk here on a lot of different levels with a lot of different underlyings in a lot of different fields. Could the market, you have to assume, I think everybody needs to assume here that everything's going to be fine and we're going to continue to go higher because that's all we ever do. And until there's something else, I think you have to play with that assumption. But I am extremely nervous and leaning, I'm going to be leaning short as of Monday or Tuesday.
When you say the riskiest part of the market, I'm just curious because risk is reward and vice versa. When you say the riskiest part of the market, are you specifically referring to the left tail or are you kind of referring to both sides, the left and the right tail?
I'm not worried about.
Do you get my question?
I'm not worried about the upside. I don't think the upside is, I understand that days like yesterday, I get how you just have to look at the numbers. Days like yesterday are incredibly rare. It's 3% of the time or 2% of the time or 3 or 4% of the time, whatever you want to say, upside or downside, 2% moves. You cannot trade for that. So you cannot worry about that. In the world of trading, and this is the mistake that most people make with trading and investing and everything in general, people try to deal with things that they cannot control. We have to stop being a society of consumers and traders and investors that focus on things that we have no control over. We should be focusing on things that we can control. And that means that one of the things I love about Tasty is that we've designed our platforms so that the majority of time, everything we do is focused on what happens the majority of time, because those are the things that I believe that you have the most control over. That's why I can't stand when speakers and when people that write about things are like, and they're just, they're almost, it's almost becomes like a performance. It's all about the drama. You know what? Here's a situation. This thing could go up 7,000%, or we could crash here, or whatever else it is. Because statistically speaking, I don't like playing for outliers. It doesn't make any sense. Mm-hmm. So I don't worry about right tail or left tail. But that's it. I just don't worry about right tail, left tail. In fact, and the people that do worry about that stuff, it pisses me off because it's not what this business is about. Like what impresses me is the people that focus on the things that you can control and the things that happen most of the time. Like, I don't like people that focus on any business where the objective is to do something that's very rare or that doesn't happen. It doesn't make any sense to me.
Yet you have run 2 brokerage businesses and turned them into billion-dollar companies, which are ultimately outliers. It's a fascinating irony of you.
Prefer a unicorn?
That is totally different.
I'm not saying it in a bad. I know I'm not saying it in a bad way, or I'm not trying to call you on any hypocrisy or contradiction. I'm saying it's ironic.
Sounds like it.
That you, as a business person, you can only find success by creating it. And I don't say only, but the goal is to create outlier success as a business person, but as a trader. The idea is to bet for singles and to bet what happens the majority of the time.
But Vic, true. But the reason we created successful companies is because we've lived by this control what you can control the entire time. We've never relied on things that we can't control. And that's what works. And I wish more entrepreneurs, I wish more people, like if you're counting on somebody else being there for you, life does not work that way. You have to control the things that you can control. And then you have to hang around as long as you can. Because that is the key. Control the things you can control and hang around as long as you can. And that is very difficult for a lot of people. Very difficult.
Amen. Great words. Wise words.